Hello, guys, and welcome to your Bitcoin report for today. I'm going to get right into it. The Fed raised rates. They raised the funds rates. And the first knee-jerk reaction in the financial community was a deflationary reaction. I'm going to open the charts up right here. Get the charts open, and what we're going to do is take a look at what I'm talking about with this initial reaction. First thing we're going to take a look at is the stock market, the Dow Jones. She plunged a lot. She fell a lot. She's down 298 now, but there was a time right there where she was down like over 400 points. And this fall was the initial reaction to the Fed, the Fed's announcement. The second reaction was in gold and silver. Let me see, gold price. We'll take a look at gold price. We see the initial fall, initial knee-jerk reaction. Okay, now what I call this, when this happens, it's like a tell. It tells what the market's going to do in advance. Okay? When the deflation starts to hit and the fear starts to hit. The initial reaction in the dollar was right here. You see this spike upwards in price in the dollar? It was running at 96.61, and it immediately went all the way up to 97.07 without stopping, without hesitation, all at the same time. Initial reaction to the Fed. This can give you an insight into the future, even though the markets have stabilized now. The dollar's more or less stabilized. Now, cryptocurrency has stabilized. Look, you're going to see the reaction in cryptocurrency right here. The initial reaction was these two bars of red right here, which took the price roughly from 38.15 down to 37.05. So it was over 100 points over $100 that Bitcoin fell. Very rapidly at a knee-jerk reaction of the Fed, what the Fed's doing. Now the markets are bouncing back, but that knee-jerk reaction shows you the future. It shows you what is going to happen when the market drops below 20,000. Now, when I first started forecasting that the Dow Jones is going to drop below 20,000, an awful lot of people out there thought at that point the Dow Jones was like, well, let's just take a look right here. We'll go back to the 1-year chart. The Dow Jones was up here at about 26,828, and they thought that it was going to go up this way, way up, the opposite direction from what it did. They thought it was going to, and I was out there saying, no, the Dow Jones is going to fall down below 20,000. Well, guess what, boys? From 26,828 down to where we are now, we're over halfway there. We've come over the first halfway. Now, we might get a few little bounces back that look something like these bounces back, but that's people selling on the rally, you know, and she's going down, the Dow. Now, 20,000 is the mark. I've said that all along. When we see the U.S. 10-year Treasury breach 3.25%, we're in for the crash. Okay? Now, U.S. Treasuries have went in the opposite direction from what I expected, and the reason why is because people are looking for a safe haven asset, and during this, they're buying U.S. Treasuries. They're buying Treasury bonds. And so, what we're going to see happen is, the Dow is going to drop below 20,000, and at some point, when the Dow breaches 20,000, the Fed's going to react. Now, they might let it go down as low as 18, 17,000, 16,000, 15,000. God forbid they let it go as low as 14,000 before they react. But the Fed does not want to let go of the program of quantitative tightening. And that is what's causing this problem. Not as much. The raising interest rates are not having as much of an effect as their quantitative tightening. They're trying to protect their quantitative tightening program. They will relent on raising interest rates. That's going to be their next step. Their next step is going to be to say, okay, no rate hikes next year. They've already cut it in half. They said 4 rate hikes next year. They've just said 2. Soon, they'll say 0 to slow this thing down, to try to cool it down. It's like trying to throw water on a hot fire. That's not going to do it. They're going to have to stop quantitative tightening, and then they're going to have to reverse and go back to quantitative easing to stop this. Then this will stop. The Dow will start to go back up again, the Dow Jones. But we're going to see a mad rush at that point into alternatives to the dollar. And, you know, you can sit there and you can think all you want. You can think, hey, you know what? There must be a million alternatives to the dollar. Places I can put my money other than the dollar. Things that don't have any counterparty risk that I can put my money into. And guess what? There's not a million places you can go. There's very limited. It's extremely limited where you can put your money if you do not want to be invested in the dollar. You have to invest in gold, silver, or cryptocurrencies. There's no other place to go. Now that we've fine-tuned it, and you realize there's only gold, silver, or cryptocurrencies, and that's it. Gold and silver, can you transfer them halfway around the world instantaneously? Do they actually fit into this modern age? Or have they become a commodity now at this point instead of money? And as a commodity, their price depends on how much industry uses them. Right? So if we get a big slump in industry, silver price is going to have a little bit harder time of it. But what about cryptocurrencies? These are totally different asset class. They're divested from the dollar, and they fit into the modern age. Right now, the price has fallen off a cliff, and it's going to continue as long as this deflationary episode continues. We can see which way they're moving by what they did when the Fed announced the raising interest rates. What happened to cryptocurrency? We've seen it drop almost instantaneously, more than $100. Okay, you might say, well, that's no big deal. It is a big deal because it shows you which direction they're going to move. Cryptocurrencies are already down at rock bottom, and they still fell further. They can fall further yet if this deflation gets worse, and it will. This creates a golden buying opportunity. The lower these cryptocurrencies go, the bigger and better the buying opportunity, because this is going to reverse. All of this is going to reverse when the Fed reverses it. And then you're going to see an enormous boom into cryptocurrencies. This is what I believe personally. I believe that at a certain point during this boom in cryptocurrencies, when cryptocurrencies is on an elevator up, then what's going to happen is more and more people are going to move into it. They're going to start to know about it. They're going to say, hey, you know what? I've been hanging on to dollars. My friend across the street, he's went into cryptocurrency, and he is got a new car. I don't. And they're going to decide to get into it, too, at that point in time. But they're going to have to pay one hell of a lot more for their cryptocurrency than if you buy at the right time. Timing is everything. So what I'm doing, personally, is picking up a little bit every time the price moves down. Okay? Now, let's take a look at cryptocurrency real quick. We see the price did shoot up a little bit, and, you know, and now the price is settling back down. I think we could make new lows. I do not think cryptocurrency is going to go as low as $1,000. Quite serious. I might be wrong, but I don't think it's going to go that low. I think the price is probably going to make some sort of a bottom, either around 2,900 or around 1,900. It's going to find really a bottom, because those are psychological barriers. Once they break down and there's a 2 in front of the number, or there's a 1 in front of the number, 1,900, or is going to be psychological. They're going to hit a psychological point where nobody wants to sell anymore. And then she slowly starts to creep up. Once she starts to creep up and the energy starts to come into the market, then we're going to see a long-term bull market, a long bull market that might not have a fall off. I mean, Bitcoin in this next bull market, I'm thinking it could go beyond $100,000. Quite seriously. So a lot of money. We could be seeing over $1,000 Litecoin each. This sort of a thing, you know? And, I mean, your investment now will be doing rather well compared to your neighbors if you can pick this stuff up cheap. It's all about getting it cheap. So you got to watch this market, and I would suggest buying it on the dips. And as she goes to the bottom, don't get your mind fixed on how low it's going to go. Let it go low. All the more for you. And I'm going to tell you, I was standing in the store the other day behind a woman in front of me, and it's a grocery store. We got a small grocery store here. We're out in the country, you know, and they sell lottery tickets. And honest to God, she was buying the awful pile of lottery tickets. She's taking forever. You know, she's trading lottery tickets in, and she scratching wins and all this kind of stuff, you know. And I was sitting there, and I was looking at her, and I didn't say nothing, you know. I felt like saying something, but I didn't. But I almost felt like saying, you know, if you took that money and instead of investing it in lottery tickets, which you're never going to win, there's not a snowball's chance in hell of winning the sucker, right? And if you took that same amount of money and invested in cryptocurrencies, you would win the lottery, basically. You know? She probably, quite seriously, spends more than $100 a month on lottery. And she probably has for a long time. You know? If she were to invest that $100 a month and not buy lottery tickets anymore, just invest it in cryptocurrency, she could win the lottery. For sure, a sure thing. Not some sort of, oh, I hope I'm going to win and playing for 20 years and never win. Anyway, I'm getting sidetracked here. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.